Good afternoon and welcome. So, is DeFi going to revolutionize finance? Well, it has all the right ingredients. It's instant, it's on demand, and globally available. And maybe more importantly, financial inclusion and empowerment on a global scale. But if we're absolutely honest with ourselves, we are barely scratching the surface. So let's look at some numbers. There are roughly $11 trillion sitting in regular bank accounts. If you contrast that with the 200 billion represented by the dot there, issued as Onchain stablecoins. For the euro, the story is even worse. 11 trillion euros sitting in the banking system with 200 million in euro-denominated stablecoins. Every day, $5 trillion worth of currency are exchanged in Forex, dwarfing the $5 billion on-chain. So, what is missing? To answer that question, we should maybe take a look at the movie business and streaming media. So in the early days, infrastructure was being prepared for future growth, increased internet bandwidth, and platforms like YouTube enabled content creators to serve their content worldwide. However, you were still watching Shawshank Redemption, by the way, my favorite movie, on a DVD. But you'd gotten the sweet taste of on-demand available everywhere. And there was no turning point. You kind of knew it in your bones that this would be the way you would consume media in the future. The only requirement was for somebody to figure out, how do we get the blockbuster movies on there, right? So platforms like Netflix did the hard work of negotiating with Hollywood, making sure that the key stakeholders were content and on board. And this resulted in the blockbusters finally being available on this new superior platform. Watching DVDs or borrowing from the internet kind of became a fallback. It took 15 years, but streaming services reached mainstream adoption. And I think the moral of the story here is, it's not only about the technology, it's also about the content. Similarly, DeFi is at an exciting point in time. We have been building the infrastructure for the last 10 years and doing some crazy experimentation in order to innovate. And I think we truly have. Just as YouTube had user-generated content, we got public blockchains and layer 2s with fast transactions and cheap. We have smart contracts that automate complex financial transactions without intermediaries. We have tokens and NFTs, which allow you to capture anything of value and store it and transform it. Wallets that empower their users to manage their own finances independently of third parties. DEXs and lending protocols that offer instant and on-demand services without intermediaries. The question isn't so much about technology anymore. So, in order for DeFi to succeed, we need that Netflix playbook and bring everything of value from TradFi to DeFi. And we need to do it with a few principles in mind. by the way, this is what the cool kids are calling open finance or OpenFi. So in this interim state, we have the OpenFi, which needs to be DeFi ready. We need to make sure that the assets that get represented are available in DeFi. They need to be compliant, which means that the asset needs to be the same thing regardless of whether it's on-chain or off-chain, legally speaking. It needs to be transferable. So you cannot be in a situation where you have to go to a centralized exchange to move the assets between the boundaries of traditional finance and open finance. And it needs to be open. It needs to be a foundational building block enabling other services to leverage the assets and create new innovative financial solutions. These are the core principles of OpenFi. I'm Gisli, the co-founder of Monerium, and we are bringing fiat currency on-chain, adhering to the OpenFi standards. And we're starting with the euro and the 11 trillion euros in the banking system. So, as you could guess, our euro, the EURI, is DeFi ready, supporting the relevant token standards, works with all wallets, regardless of if it's an EOA account or a smart account. It works with the leading protocols like Curve, Balancer, and Uniswap. It is compliant, so we were the first company in 2019 to become an electronic money institution, or an EMI, authorized to issue stablecoins on a public blockchain. So this license is the same license that Revolut and PayPal had. So it's the same euro, only it's on-chain, it's MICA compliant, and it's DeFi native. It is transferable. Centralized crypto exchanges are great for buying and selling cryptocurrency. But you won't use your Coinbase account or Kraken to pay your landlord or pay salaries. So for this to go mainstream, your wallet needs to do at least everything your bank account does. And that is why we created the Onchain IBAN. The Onchain IBAN is in your name and it's connected to your wallet address, allowing anyone to send euros from a bank account to your wallet. Now, how does that work? The euros get automatically minted as they land on the IBAN into your wallet. And sending money back is just as easy. With a signature from your wallet, the tokens are burned, they are placed in your IBAN, and we trigger a payment. You can send payment to any connected bank account. And the payments are done in seconds, one-to-one, without fees. All of our infrastructure, the APIs, the SDKs, the smart contracts, they're all open, ready to be used on Ethereum, Polygon, Gnosis, and our smart contracts are, of course, audited by the industry leaders. We always envisioned that services would be built on top of our infrastructure. And it currently is. So just to name a few examples, Gnosis Pay, it's a card solution that you're probably well familiar with, is using our infrastructure to power the on-chain and off-chain payments for the cards, the settlement for the cards. You can invest in securities on OpenFi platforms like Tokenized and backed with the EURI. And we're even seeing platforms like UWrap built as an alternative to centralized exchanges where you can truly go from a cryptocurrency on any chain to a bank account to pay your landlord in a few minutes and minimal fees. Since the launch at EthCC 2 years ago, Our URI has passed 1.3 billion in volume, and we are moving more volume than Circle's Euro C, the Tether UT, and the other fiat-backed stablecoins combined. So I think it's safe to say that we've clearly struck a chord with our users, and we're just getting started. As you know, there's so much to build, and today I would like to make a few announcements, but you'll have to wait for a few more slides. So, as you know, in DeFi, the dollar is king. Of the fully backed or the fiat-backed stablecoins, 150 billion or 99.8% of all the stablecoins are denominated in dollars. And we, of course, all know why this is the case, because the main use case is cryptocurrency speculation, which is priced in a dollar. Centralized exchanges and their users leverage USD stablecoins for faster and cheaper transaction rails compared to the inefficient traditional USD banking system. However, out of the top 10 stablecoins, 9 are now illegal. And this includes Tether, which represents 75% of the market share. The Markets in Crypto Assets Regulation, or MICA, has recently come into effect, and centralized exchanges in Europe have started to delist Tether's USDT. This regulatory shift is set to create a significant gap in the European dollar market. So, similar to how Napster was a catalyst for streaming media, but never really became the long-term solution, the market now needs a compliant, reliable alternative. So today, I'm excited to announce that we at Monerium are bringing a dollar stablecoin to the market, and just like the URI, it is MICA compliant and designed to be a long-term solution. We are already in discussion with centralized exchanges and market makers to make sure there's enough liquidity. We believe that cross-border payments, card payments, and other mainstream use cases will emerge this year. And we're committed to offering the best infrastructure to support these platforms. Over time, the USDE will be integrated into ACH and Fedwire payment systems in the States, providing the same efficiency and reliability as we have done for the euro and the SEPA system. And there's one more thing. In addition to the dollar, we are also introducing something I am really excited about. And we are calling it Onchain FX. So in a similar way, we have bridged the gap between traditional finance and DeFi with our on-chain IBANs. We are now bridging the Forex market, initially for the euro and dollar pair, which will allow our users to exchange between USDE and URI at the same price as traditional FX with no slippage. So don't get me wrong, we love AMMs, right? And they are, for the long tail of assets, meaning assets that don't have a lot of liquidity, they are the best solution. But for markets that have a lot of liquidity in TradFi, they're terribly inefficient. I was here yesterday listening to a talk by Pablo from Anko, where he was stating the problem that the baseline fee or the yield that a liquidity provider in a DeFi protocol wants is 20%. We'll never be able to scale with those numbers. So we are allowing our users to burn a token, let's say a euro token, and mint a dollar token, and we take care of the rest by making sure that we maintain neutral reserves when it comes to our current currency reserves. The plan is also to go further. The plan is to support DeFi by introducing this into intent-based trading and be fully compatible with the DeFi solvers, enabling sophisticated and efficient trades. This approach allows the users to specify the trading intentions signed and having them executed at the optimal time and place. So if you think about it, the URI and the on-chain IBAN, the USDE and the on-chain FX will enable dApps to have the same capabilities as neobanks. So you can already start building with the URI today, and we're launching USDE and on-chain FX in Q4 this year. Platforms, exchanges, and market makers can join our beta today by talking to us here. We're in blue shirts with the Monerium logo. Or alternatively, you can reach out to us at partnerships@monerium.com. So with that, I thank you.
We have time for questions.
What chains?
Good question. So right now we are supporting 3 chains. It's Ethereum, Polygon, and Gnosis. However, we will be launching on other chains soon, and I believe there's going to be an announcement for the first non-EVM-based platform later this week. So we are currently broadening support for other chains. Let me know. I would be interested in hearing which chains you would like.
All of them.
We'll get there eventually. It's just a matter of prioritization.
Hello. Just to ask which token is supported. Is it like a ERC20? Is there any KYC checks?
Yeah, so that's a good question. So actually, it took us 2 years to convince the regulators that money could live on a public blockchain. And one of the things that the regulators struggled the most with was that no one was actually custodying the money, no third party was custodying the money on the user's behalf, right? And the initial conversation was exactly around KYC for all holders of the token, right? However, we kind of did the hard work, we explained, we managed to convince the regulators that any address can actually hold our tokens. However, we are in the business of making sure that the funds are compliant. So whenever the funds are crossing the chasm or going from TradFi to DeFi and vice versa, we have to make sure that these funds are not coming from illicit sources. We have to know the customers. So in order to get the Monerium IBAN, you will need to sign up and go through a KYC. So does that answer the question? Yeah.
Given that you're now a new kid on the block regarding the stablecoins, how would you keep the price stable in case of a rush to your new stablecoin when markets go down and you have to back them in a compliant way on the TradFi side?
Yeah, exactly. That's a fantastic question, and thank you for giving me the opportunity to explain this. Because in my mind, I come from Iceland, where the financial crisis hit us probably the hardest, with all the banks collapsing overnight. So I can say for sure that insurance schemes don't work in that kind of black event, right? So what we set out to do was to build something more resilient, much resilient. And actually the EMI license had been in existence in Europe, hiding almost, for over 20 years, right? And that kind of stipulates how we safeguard user assets. We cannot go out like a bank and lend them over and over again. So we only safeguard the funds on behalf of our users. And we even have to provide 2% of our own capital as an insurance on top of everything we issue, right? So you can rest assured that if all the issuance wants to leave today, we'll have the funds ready. They are not invested. They're available on demand by law. So that's how we keep the prices stable.
Thank you, Gisli. Thank you.